Okay.
Go.
Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Sorry for the interruption, and I'm going to start the webinar again from the beginning because there was a technical issue. So, Asian sessional live market analysis and the forecast for the week 2nd to 6th of November 2015. So today we are on 2nd of November between 5 and 5:30 GMT. I will try to give the webinar explaining the expected market moves from Monday to Friday of this week, and also the session-wise forecast. I'll give it in detail with regard to the two majors, Euro and GBP. And also, I will try to do the market reading and the recommended trades for this week, besides the trading strategies. How exactly we have to use the trading strategy during the of the month beginning time, wherein the market is expected to be very volatile. Month beginning and the month end time, the market is known to be volatile, and they make the monthly trend reversal moves in order to handle the futures and the options market. And many of the exporters and the importers face very tough time during such option expiry and also during that of the forward cover expiry time. And hence you come across such big moves in the market. And also those who trade without the stop also get the margin call during this particular time frame. They ask most of the traders when they lost their account, they will say the month beginning or month end. So you have to be very cautious during that of the month beginning at the month end time. If you have got very less equity, then avoid taking positions. If you have got good equity, then still use the hedge order to limit the risk and try to choose a platform wherein the hedging facility is available, so that you will be able to sustain and capture a big profit during that of the either way spikes, which is known to happen during this particular time frame. So for those of you who wanted to contact me and try to get more details about it, and contact me through email dr@i-knowindices.com, and my Skype chat ID is iknowindices@hotmail.com. So we take into consideration three important components, namely the derived forecast, which is statistically derived by sequential statistical analysis, and also we fine-tune the forecast because the forecast is given for the week or the month, and every day we fine-tune it by using a market reading technique and also live market analysis, and find out how exactly we can take the trades. Then also I'll explain to you the trading strategy, how I use it during the of taking the positions live before you. And I will also recommend the trades, and that can be used in a demo trading platform, and you can find the reliability of the forecast. So this being the first week of November, the market is known to make the trend reversal 2nd to 6th of November. And also you come across BOE interest rate decision and non-farm payroll are going to be announced on Thursday and Friday. The market is expected to be very volatile. So trade with caution. And also you come across from now in US also the daylight saving system is shifted. As a result, you will come across European session will be extended up to 14 GMT, and the US session instead of 13:30 GMT will start by 14:30 GMT, end by 21:30 GMT. So as a result, you will come across European session will gain about an hour and lose about 30 minutes with Japanese session and gain 1 hour from US. And US will be gaining 1 hour from that of the gap time between the US and the Japanese session of the next day. So with regard to the expected market moves, today, 2nd of November, the market is expected to make a swing and firm up during that of the Japanese session. Then European session swing and slide is expected to happen. So when it is mentioned as swing and slide, means higher level swing. They make about 15 to 23 pips swing near that of the high and suddenly make a slide closer to that of the low. Then swing here during that of the US session will be swing closer to that of the low, and then they will make the rise during that of the US session. So that is why they are all given here. So you have to understand when they want to firm up, that means they will make lower level swing. When they want to slide, they will make higher level swing. So from there you can take a trading decision. So if you want to take a trade during the European session, you can do a sell and buy trade. And if you want to do a trade during the US session, you can do a buy and sell trade. That way you can identify the type of trades you can do for each of the session. And then you come across tomorrow they are expected to make the slide during the Japanese session and start rising during the European session using some SQs or a trigger, and then they continue to firm up during the US session. Then again on Wednesday, they are expected to make the swing and rise during the Japanese session, and swing and slide during the European session, and then swing and rise during the US session. On Thursday, 5th of November, there's going to be BOE interest rate announcement. So they are expected to make the swing and slide move. It will appear as if they have started making the slide beforehand, and they will try to make a firm up move during the European session after the BOE announcement by 12 GMT. Then subsequently people might think that it might be used to rise the market, but suddenly they will make a drop and say that no, non-farm payroll is important, and that is going to be the deciding factor. So earlier you know that FOMC was considered as the deciding factor, and then subsequently they just discounted it, and they continue to use the new events as the factor which is going to determine the market moves. So always you have to understand that market sentiments are created by the other players, and they are all short-lived, and they counteract against that in a matter of about a day or two. So we need to be very careful, and once the market sentiment is created, you should not think that it is a long-term sentiment, because after the FOMC, many people, and if you go in for the FX Street poll, many of the analysts become bearish. And also you come across that on Thursday and last Thursday and Friday the market has gained the levels. So that is how the players create the market sentiment and pretend as if the charts and make the market to appear that they are going to make the slide further towards the close of the year, but subsequently they reverse the market and trap the traders who are taking the sell positions and induce them to do the short covering. And also the new year time, the market is going to be very aggressive, and during the January and February also they are expected to make very quick upward moves in the case of Euro and GBP. So avoid doing sell and buy trade during this particular time, and don't think that it is dead cat bounce back and things like that will get trapped. Then on Friday, for the non-farm payroll, swing and firm up moves are expected during the Japanese session, and then they will make the swing and slide before that of the non-farm payroll. After the non-farm payroll, they are expected to make a small swing upward and the downward either way, pretend as if the market is not going to rise. And you know that the non-farm payroll expected to going to be less than expected, less than the projected levels, and then the people might think that okay, now it is a question of the sentiment created, even though the non-farm payroll is not very promising, but still they will say that USD could be gaining, but subsequently they will make the swing and rise move during the US session. So the players pretend as if the market has simply discounted non-farm payroll, which is expected to be less than expected from that of the market angle, and then subsequently they are expected to make the swing and rise. Then second week of November, the trending time is going to start from 9th to 13th of November. Swing and rise moves may be seen, and that might give enormous surprise to the traders. So keep in mind that we derive the forecast. This is what the forecast says, but still the forecast can go wrong. We always understand that it is developed by human. I have developed the algorithm and given the forecast, and can go wrong at any given time. In such a scenario, we use the trading strategy to limit the risk, and that I will explain it once I take up the positions for today's trade. Then with regard to the levels in which the currencies are expected to swing, and Euro is expected to swing from 1.10. This is the projection and this is actual. I will update the actuals during that week and finally show it on Friday how exactly the market, either it has deviated from that of the projected level or it is in line with that of the projection level. Every week I have been showing it, and you can understand, and also you will be able to get the insight how reliable the forecast is. Euro is expected to swing from 1.10 to 1.1425 area, and GBP could come down a little bit to 1.5375 and then go to 1.57 area. And you know that players use GBP to create the market sentiment, and already you would have noticed that last week they made a quick drop in the case of GBP when compared to that of Euro, and which induced many of the analysts expecting the market to make further downward move, but subsequently they gained on Thursday and Friday. So also, as I explained many times, that when they are making either way moves in the case of Euro and GBP, they make less drop and more rise moves in the case of denominator majors, namely USD yen, because the currency comes in the denominator of the ratio USD yen and USD CHF. So both these, if you notice carefully, right from the beginning of last month, they have been continuously gaining the levels, and you might think that Euro and GBP have come down, that is why it has gone. But once they are gaining the level, last Thursday and Friday they gained the levels in the case of Euro and GBP, but they did not come down in the case of USDN and USD CHF. So slowly they will take it upward. As a result, what happens when Euro and GBP gain the level, you come across the US dollar index might be reduced because of their influence. But subsequently, when Euro, USDN and USD CHF gain the level, US dollar index might gain, and so whatever the US loss you come across with regard to the US dollar based on Euro and GBP rise might be compensated by USDN and CHF rise. So as a result, you will come across not much of a headway in the case of US dollar index. So the players from time to time induce the traders to follow the market using some such correlated factors. See, you know that earlier they used to compare that of Dow Jones to that of the Euro, Nasdaq to that of Euro, and Nikkei to that of Euro, and gold to that of Euro. Now US dollar to that of Euro, and then subsequently they will say no, it is the stock market which is going to influence. So keep in mind that the numerator and the denominator, they are expected to alternatively gain the levels, but they are not going to lose much of the levels in the case of the denominator. As far as the commodity pairs are concerned, because they are all called commodity pairs, their action or their market moves is supposed to be based on the exports and the imports of oil and gold. In the case of Australian dollar, gold, and in the case of Canadian dollar based on oil. So as a result, you find these two commodity pairs, USD CAD and Australian dollar, are expected to make either way moves, but Australian dollar is slowly expected to gain from 0.7125 to that of 0.74 area, but USD CAD is expected to come down to that of 1.2950 and again gain back. So you will come across either way stop-ins in the case of USD CAD. So it will be middle level consolidation in the case of Canadian dollar, and as a result they will make either way stop-ins during that gain. So when Euro and GBP are gaining, at times you will come across USDN is also gaining, or USD CHF could also be gaining. Last Friday it was happening, and I was telling you that they are all contrarian moves. When they make such contrarian moves, you come across the respective crosses like Euro yen, GBP yen will also gain the levels. So the same way last Friday they gained the levels in the case of yen crosses, and also in the case of USD CAD, sometimes they will make Euro to gain and the USD CAD to gain. You can find out with the help of the net changes. Now let us analyze what is happening in the market. Now Euro is showing 22 pips positive net change, and GBP is showing 0 pip, no positive or no negative. It is unch condition. So this is a contrarian move, and when euro is gaining the level, USD is losing the level by 28 pips. So you come across that it is making the USD weakening move. And in the case of CHF, also it is making USD weakening, and Canadian dollar is negative net change, and Australian dollar is nominal positive net change. So all are showing the USD weakening move. Slowly, what they will do, they will show positive net change in the case of numerator and the denominator. Then you can understand that they are handling the crosses. So we'll go to the market reading now. The next, fine tune the forecast. Now, these are all the initial lows and highs I have noted down by 3:30 GMT today. And a day means 24-hour cycle. We follow that day using the GMT time frame. So it is the initial low 1.1018, and you can compare it with the live market page. 1.1018 and 1.1038. So the lows and the highs are not breached. And in the case of yen, they are showing the high of Friday, but actually the today's high is 120.61. I'll come to that of GBP now. 1.5428 is the low. They just breached it by 1 pip to 1.5427, and they are holding closer to that of the low. That is why you come across net change is 0. And high is 1.5455, and it is not breached. So they are likely to make a brief downward stop and then start gaining the levels. And in the case of yen, 120.28 is the low, and they just breached the low by 2 pips and went up to 120.33. 120.61 is the official low, but in the live market put page, you come across Friday high 121.47. So they are likely to gain the levels in the case of USD yen whenever needed, whenever they are handling the yen crosses, along with that of euro and GBP. And also along with that of euro and GBP, they can drop also USD yen during that of the European session in order to bring down the yen crosses, and then subsequently during US session they can make contrarian move and gain. So always keep in mind that they handle the majors and the crosses alternatively. I'll explain it with the help of the time frame. Then USD CHF is showing the low as 98.56, which is not breached. 98.76 is the high, which is also not breached. So they are all making less than 40 pips spread, indicating that the market is subdued, and the players are expecting the volume to build up, and then they will try to increase the spread between the high and the low. Then in the case of Canadian dollar, 1.3064 is the low, 1.3081 is the high. They are not breached the low or the high from 3:30 GMT. Nowadays, around 5:35 GMT, still they are not breached it. It indicates the volume is relatively low. And in the case of Australian dollar, 0.7119 is the low one, 0.7149 is the high. Again, here they are not breached the low or the high. So players, the traders are waiting for the market to set the direction, and then they will try to commit the positions. Being the first week, the traders are invariably, the traders become cautious and try to understand how the non-farm payroll is going to be, and then try to commit positions. So the players will also try to make some small swings and slowly induce the traders to commit positions. Those who become addicted to trading, invariably they will not be in a position to calmly wait, and their impulsiveness induce them to take the positions. So that is how they know very well, once the traders become addicted to trading, they will not be able to get rid of it. So it is something like developing a habit of smoking. So here you come across that the players are here to create the market sentiment and act against it of the traders. That you should never forget. Now, after understanding the initial lows and the highs, let us go in for the trading. So I have given the recommendations with regard to the trades. Now in the case of euro, we can keep the buy limit order 1.1024 as the the market is holding closer to that and not breach the low or the high, they are unlikely to breach the low, and then they could gain slowly the level during the Japanese session. So I will try to, I kept 45 pips as the limit order. You can keep 30 pips also as the exit or the limit order, and keep the hedge order 30 pips below. Then in the case of GBP, I think I got a fill now. It has become a position. So closer to that of the low, I had taken the position. They cut the low by 1 pip, but I kept the hedge order 30 pips below to limit the risk, and also 45 pips limit order to exit out of the positions. Now, in the case of Australian dollar, 71.29, it's quite far off, 10 pips below. I kept the limit order and also the stop order. Now, with regard to GBP, since I had taken the position, I'll explain to you how exactly I will be handling that situation using the trading strategy. This you can try it in a demo trading platform in order to understand how the trading has to be done using the hedging. Now, after taking the buy position, you have to keep immediately sell stop in the MetaTrader platform. So 30 pips below 1.5398, or even at the time of keeping the limit order, you can keep the sell stop, because only when the limit order is filled, the market can come and hit your stop or the sell stop, the hedge order. Otherwise, they will not be able to fill it without filling your buy limit. So automatically, simultaneously, you can keep the buy limit as well as the sell stop at the lower level for a buy position. If you are doing a sell and buy trade, for a sell position, we'll keep a buy stop at the higher level in a MetaTrader platform, wherein the platform provider should offer that facility, the hedging facility in the same currency pair. And how to trade with regard to if the hedging facility is not available, probably when I give the Tracking the Forex Market Together webinar, which could be scheduled soon, at the time I'll explain to you how the trading strategy is vital in order to consistently earn money from the market during the either way moves of the market. Because the market is known to make either way moves, and the players do not do hat tricks, so that means they don't continuously rise or continuously drop for more than 2 days, 2 sessions, 2 days. So we need to capture such profits and without becoming bullish or bearish. Now, in the case of GBP, when they filled my position, I got the buy position, and later on in the event, if it comes down and fill my 1.5398, then I wait for 10 minutes whether this sell stop is making profit or loss. If the sell stop in 10 minutes it is making profit, I wait till 30 minutes to find whether it is making profit. By the time I keep stop at entry, the sell stop in 10 minutes it's not making profit and it is making loss of 1 or 2 pips. Then I understand during the stop and it got filled when they made a stop and below that of the psychological level 1.54, and it got filled. Sometimes, you know, the platform, even though the market might not have come there, the platform providers fill your stop or the hedge order. You have to be careful with that, and then subsequently you try to close such position when it is not making profit for 10 minutes and keep another hedge order 30 pips below the market. Then once the market goes above your buy limit, then or go closer to buy, started rising, you can raise your sell stop upward to that of the original level. And once the market goes above that of the buy position, then you keep stop at entry when it goes about 15 to 23 pips above that of the buy position. Keep stop at entry and remove the hedge order. So purpose of using the hedge order is just over by that, and then we try to maximize the profit. We keep the entry, the take profit order, the exit order, and use the stop at entry to become, or try to convert it into a trailing stop of maintaining 15 pips. So what happens when the market shows 15 pips profit, it will be at stop at entry. When it shows 20 pips, it will protect 5 pips profit. When it shows 25 pips, it will protect 10 pips. So that way, it will be 15 pips below the market and start moving upward when they are gaining it. Then you can continue if this trailing stop is not filled and market comes closer to your take profit level, you can raise your take profit level another 25 to 30 pips, and then they will try to gain the levels, and you can find that you are really maximize the profit. And suddenly the reverse also, your trailing stop will get filled and protect your profit, so that you will not repent at any time. Invariably what happens, many of the traders, when the position is in the money, they just call their friends and say that, no, my hero is making about 45 pips, I am really feeling great, and okay, my coffee is earned or my lunch is earned. That's why they have been doing in the chat, and suddenly they will reverse the market. The person will become really upset and he will say, no, hell with the market. Becoming emotional is of no use, because ultimately you should be able to use the trading strategy and protect the profit. By shouting at the market, shouting in front of your computer, they're all nothing but the erratic conditions of emotions and nothing more than that, and it is not going to influence the market, or it is not going to affect the market. It is going to affect only your own health, because once you become distressed and once you become emotional, and it is going to act on your heart. So you have to control your emotions. If you want to really control your emotions, and your drawdown should be very less. And for that, you should avoid over trading and see that the equity is not eroding just like that by taking several positions. And also, you should see that you have got a risk limiting factor like hedge order, so that if the market goes down or against you, your hedge is going to limit the risk. In the event, if you use the stop, what happens? Your stop will realize the loss. When you use the hedge, it will only limit the risk, and also it will block the money, similar to that of the loss. But if you use the stop and the stop is hit, you lose the positions and also you lose the lost money from that of the equity. Then what happens? You don't have fresh positions. Once you lose $300, then immediately you really become afraid and you become cautious, and also you become hesitant to take a position for another 1 or 2 hours. So you invariably miss the next great opportunity of booking profit. So if you use the hedge order, you can just watch the hedge, how exactly this is happening. So it is similar to that of somebody is holding a buy position and another position is taking a sell position. How they are going to perceive the market during different conditions. That is how we are going to act. And if you watch that the hedging is not making profit for 10 minutes, then understand it was filled during stop it. In the event, if the hedging is making profit, like last Wednesday, after that of the non-farm pay, after that of FOMC, they made a big drop. Then simply you keep stop at entry in the sell stop, and then they will come down, and you can understand quick moves or false moves in the market. Then after about 2 hours, you will find that they have stopped cutting the new low and slowly accumulate the buy positions. That at that time you can book profit in the hedge and keep 30 pips below the hedge order to limit the risk, sell stop to limit the risk. And the next day when they start gaining the level, you can trail the hedge order upward, and then till they come to your entry level, you can just trail the hedge order, and once the buy position makes profit of 23 pips, you can keep stop at entry, remove the hedge, and maximize the profit on their upward move. So if you do the trades on either side, you will be able to really capture the profit without any market fear. Otherwise, we will say that market is volatile, let it settle down, then later on I'll enter into the market, and you will find that invariably you hesitate and wait. It is something like you go to the sea and you want the waves to settle down before taking a bath, but that is not going to be a real situation. Now, from today onwards, you will come across, as far as the trading days are concerned, from yesterday, the daylight saving system is stopped or shifted in the case of US also. So in Europe as well as US, the daylight saving system, saving time is shifted. So normal standard time is going to be used. And as a result, you will come across 0030 to 7:30 is the Japanese session, 7:30 to 8 is the European gap time before the start of the European session, 8 to 14 is the European session, 14 to 14:30 is the gap time before the start of the US session, 14:30 to 21:30 is the US session, and then 21:30 to 0030 the next day is the gap time before the start of the next day Japanese session. So I have given the first 1.5 hours and the last 1.5 hours of the early and the late sessions, and in between time is the mid session. The early sessions, they handle the majors. Early and the late sessions, they handle the majors. During that of the mid session, they handle the crosses. At that time, you will come across the contrarian moves happening in the market. Some currencies making US dollar weakening move, some currencies making US dollar gaining move, and that way they try to handle the market. So during the gap time, they make the false move, and also you can understand that they alternate the intentional move with that of the extended move. Intentional move is for about 2 sessions and the start of the 3rd session, and the extended move is for 2 hours. So whenever they make quick moves, either it can be for 30 minutes as a stop and or for 2 hours as an extended move. Now my GBP position is in the money, so you can understand how they are making a brief downward stop and start gaining the level. So this, if you look into that of the chart, there might be a delayed signal, or it might give a impression to that the support is breached and probably daily low is breached, so market is likely to come down, but the players simply make a brief downward stop and take up, and later on you might conclude that it was only a noise, but you are not having any position to make money. So let me answer the questions which are asked here. Okay. There is a question here. His Hassan, what is the highest level you expect for euro by end of the year? Probably we have got another, this month and the next month to go. So during the last month, December, I'll explain to you. But euro and GBP are expected to gain the levels, but I'll give the levels later on. But it's too early to give it, because invariably when I give such levels, what happens? Some of the traders simply holding the last making position for a prolonged period without taking adequate caution of using the hedge, etc. Then when the market make volatile move during that of the first week of November, they think that the forecast has gone wrong. So if I give only for this week, probably you will trade it sensibly and also use all your hedging order. Because I have been giving even the yearly forecast in FX rate earlier years, but subsequently the traders started presuming that the market will go straight up and straight down, but that is not going to be the case. And not more than 2 sessions, not more than 2 days, not more than 2 months, they make the trending move. So you have to understand that market means volatile moves, and market, they will create the market sentiment and act against it of the traders again and again. Once they trapped the short sellers, they will trap the long holders alternatively. Only then the players will be able to earn consistently money from that of the market. So keep all these factors in mind, and then try to trade with caution using the hedge order. And after keeping stop at entry in the buy position, then you can do the position trade, so that if the market goes against, you will only lose the position without any money loss. If any other question you can ask me, I'll answer to those questions. So I'll come back on Friday, 6th of November, same time 5 GMT, and try to review the forecast, what I have given it today, and try to find out how exactly the market is expected to behave. Then I will also try to get a slot for 15 minutes before that of the non-farm payroll and try to give you the spike trade possibilities, what you could see on the day the non-farm payroll is going to be released. Now, so I take this opportunity to thank FX Trade for the facilities provided, and also you people who have come here to listen to that of the webinar, and also try to see that you understand the concept of trading. So forecast is one component, market reading is another component, each one is 1/3, and the trading strategy is another component. All the three are to be simultaneously used so that you don't incur loss in your trades. Ultimately, you have to preserve your equity, and if at all anybody can help you in trading, can be yourself, nobody else. And if you are hungry, only you can eat, nobody else can eat. So understand the market and understand it is a man-made market. In a man-made market, you do find men try to exploit other men, the weaker men who have got lesser equity. So you have to understand, if men have to grab the money from that of other men, the only possible way is cunningness, nothing more than that. So they pretend as if they are going to help you and then trap you. And always be cautious and don't simply suspect everyone. Instead, you be abundantly cautious and try to prevent that you don't incur any unlimited loss. And then you will be able to really understand market trading is really a challenge, and you will be able to consistently earn money along with that of the players. So thank you one and all for your kind listening and understanding of the forecast. And also I take this opportunity to thank FX Trade people who are really taking all the efforts to see that the small traders are really benefited by listening to and also viewing the forecast analysis and various perceptions and market readings, etc. Thank you one and all. See you on Friday.